Good morning, everybody. Happy Tuesday to each and every one of you. Hope everyone is doing well as we get into the market action today. So this is the game plan here at Verified Investing. And what I do, if you're new, is I cover the charts based on technical analysis, which essentially is probabilities, right? So ultimately, instead of relying on hyper narratives, we focus on probabilities, which then should put us in a position to win a majority of opportunities in the market. All right, before we get into the charts, just touching quickly on the CPI data. CPI today coming in a little bit better than expected, right? So still no sign of the tariffs that had been imposed here over the last month or so in the data yet, at least. The question is that because of housing? So housing is basically doubly weighted in the CPI, and we know housing has been essentially crashing in terms of prices. So that could be why the CPI numbers are coming in essentially better than expected. The question is, does that continue? And ultimately, does the rollback on tariffs on China kind of put a cap on the inflation number? So we'll watch and see, but you can see on the screen below me here, CPI coming in at 2.3% versus 2.4 expected, and month over month at 0.2% versus 0.3%. Okay, let's flip into the S&P here and take a look. And if we look at the S&P, you can see initially on that inflation data, the market spiked up, but then basically came in. And again, my hypothesis on why that happened is likely that initially the headline numbers got the algorithms and maybe some retail investors to essentially jump on the market. But then at closer look, we can see that, again, that's being weighted down by the drop in housing. And that could be why the inflation numbers were not hotter. Either way, markets were trending up into that print. This is the 10-minute chart of the S&P futures, and then popped and then essentially came back in. And basically, since that report came out, this would be where we started, and that's essentially unchanged. So markets are basically flat this morning. We'll see again where everything goes, but right now, again, on the flatter side. Now, you can see, again, that grayed out area there. That is this level right here, and we are still in it. This is a level I gave you guys yesterday to monitor as key resistance on the S&P futures. We are right in that zone currently. The question is, do we push above it? If we do push above it, we're looking at a level somewhere in the vicinity of around 5950 to 6,000 on the S&P 500 or the S&P futures. All right, and just flipping over to the S&P 500 precisely, this does not show the pre-market data since it's the S&P and will not open till 9:30 a.m. Eastern time. However, if we just look at the levels here, you can see this would be that next key level. See these little lows in here. In addition, if we look at the fib retrace levels, you can see that we are coming up to the 786, which is right around 58.66. And then just above that, you'll have this pivot low right in there. So the S&P has been resilient. I mean, listen, you can't take anything away from the rebound on the S&P. If we look at the April 7th lows to yesterday's close, a 21% gain. On the NASDAQ, it equates to a big 26% gain in basically 1 month. And again, this looks very similar to what happened in COVID. And I think that's something to keep in mind. I was discussing this with the traders on my trading floor this morning before I jumped on the game plan here with you guys. And we were kind of intrigued by the velocity of this rebound. And the question we had was, this is very similar to the rebound in COVID and how quickly it happened. And the question is, are investors pre-programmed, since basically every down move in the market has resulted in a move to new all-time highs within a matter of months? Are we programmed to automatically assume we're going to have this V bottom and therefore get back to all-time highs? And is that then a self-fulfilling prophecy? Then you have to take it one step further, which is what I found in the markets is when you assume something is happening. So it happens once, it happens twice. And then by the third or the fourth time it happens, everyone assumes it happens or will happen. And that's what we're seeing here. And the question is, does then the market say, no, 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 and then wipe everyone out that assumes that, right? And again, that's happened to me in the markets many, many times over, where something just is like, oh, well, of course, that happened last time and the time before that, so it should happen this time. And then the market has a way of making us all look the fool. So I'm just throwing that little bit of caution out there. It's a great V-bottom recovery in the market. We are still coming up into key resistance levels. I won't fully trust this market until we confirm above all-time highs. Then I think you can say, okay, the bull market's back until proven otherwise. That's just the nature of what the charts are saying. Okay. Let's flip over here. Here's your NASDAQ recovery. Again, the NASDAQ recovery for me, I take the all-time high here down to the recent April 7th lows right down here. And you can see that a big level for me is going to be around 19,050. That is this low area. See all these lows right here, 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 and across. And then notice the 786 is right there as well in that midst. So that implies that the NASDAQ would have, we closed yesterday around 18,700. So you'd be looking at about 350 more points to the upside. So it's not a huge move. Yesterday, I think we were up almost 800. So it's just another 350. But nonetheless, that could imply a little bit more upside on the NASDAQ before we run into major resistance. The 10-year yield, again, I normally don't go over this day after day, but I've been going over it because it's such an important chart. Yesterday, again, we saw further upside in yields, almost back to this previous high where the markets were really freaking out, right? Where we saw, again, yields going up while the market was collapsing. Now, again, after the CPI data, if we flip over to the 10-year yield, you can see that the CPI data has brought the 10-year in just a little bit on the intraday, which makes sense because if we're seeing lower inflation, it gives the ability to the Fed to maybe cut rates a little bit more aggressively, assuming we don't see an uptick in inflation, right? So if inflation is lower, it allows more stimulus, aka rate cuts, or spending or stimulus from the Federal Reserve or even the government. And again, that is bringing in yields just a smidge today. But I'm still on alert. I think if we ever hit this high, because the market has deja vu in terms of or kind of PTSD in the terms of remember when yields were up here, what the markets did. I think if we come up to about the 4.6% level on the 10-year yield, you would probably at that point see the markets get a little bit nervous. Now, Coinbase. Let's talk Coinbase here, guys. This stock is making an impressive move. It was announced yesterday after hours that they would be joining the S&P 500. I believe next Monday, I think they're being added to the S&P 500. And remember, when a company is added to the S&P 500, everyone always asks me, well, why just being added to an index does price automatically go up? So essentially what ends up happening is you have funds that basically like ETFs, right? We all know ETFs. And there's ETFs that track the S&P 500. And so those funds or those ETFs, they must hold every stock in their fund to equal out what the S&P 500 does, right? So essentially you get to mimic the S&P that way. So if a company is added to the S&P, there's a bunch of funds or ETFs that then have to buy the stock. Now, is that happening at this point? The answer is probably not, but retail investors and funds are privy to this information. And they know that in general, that pushes a stock up. So they're front running essentially that ad of the S&P 500. And that's why Coinbase is rallying this morning so sharply. So Coinbase is up almost 10% here on the back of this. I do have a very key level I'm going to be watching to short. You can see it on my chart already. This level right up here is a very, very key level on Coinbase, okay? It's right around the 245-ish area. Now, you can see pre-market we're trading right here. So we're not that far away from that level. Now, you might say, well, why is that a good level? Well, remember, former support hits, bounces, and then finally breaks down. Former support now becomes resistance. Now, that's just one factor. And remember, as a technician of the charts, we generally like to take multi-factor trades, not just one factor. Listen, one factor gets you about 60% odds, which is not horrible. But again, 60%, it's a little better than 50-50. For me, it's not good enough to take a trade. Now, I look for another factor. What I do is I take our recent high here at approximately $350, and I drag a Fibonacci retrace down to our low here at basically 143. And lo and behold, the 50% fib retrace aligns with that level almost perfectly. Okay, so again, it doesn't matter what you think on Bitcoin, doesn't matter what you think on the markets. My job is to just look at the data and the confluence of factors that align to give myself an edge in the investing world. Whether it's a long or a short, I couldn't care less. I want multiple factors. So essentially, we have two factors, 50% fib retrace and pivot point right here, this low pivot that was support, now resistance. Therefore, at approximately 245 to 250, this would become a probability of favoring, strong probability of a pullback off of that level. All right. So again, I just basically walked you guys through my mental kind of thought process of how I find my swing trades. And again, I just do this over and over again. I'm not reinventing the wheel. I'm not coming up with crazy calculus-based, calculations. It's none of that. It's literally using the simplicity of what's in front of me with things that naturally occur in nature, aka the Fibonacci sequence, because we know it works on a historic basis. Okay. So again, that's kind of cool stuff just to kind of think about that. All right. UNH getting slammed today. The CEO announced that he is leaving. The stock basically suspending guidance. Now, the stock is falling about 10% this morning. It's trading at 341. Now, it's not a buy yet, but when you see a daily chart, I'm going to flip over to the daily chart. This is the daily chart. So it was already trading down all of this way. And then if I zoom out, look, it's down here now. Now, this gets my attention. This is what, listen, and by the way, I want to be clear on this. Just because UNH is down and it gets my attention does not mean that there is a trade here. But when I see something that is already oversold and it's gapping down, I'm now thinking, what am I thinking? I'm thinking capitulation. Capitulation is that final flush out on panic and fear where people start to say, okay, wait, essentially where retail generally panics and finally dumps. And then institutions are down there saying, oh, thank you, thank you, thank you, thank you. Let's load the boat down here. So by no means am I saying UNH is a definitive buy just because it's down, but what it does is it gets my attention. It says, okay, it was already oversold. Now it's down another 10%. Let's look closer at the chart to see if there's an opportunity here. All right, so what do I do? Well, I say, okay, well, there's a gap fill right down here and a pivot low right here at around 323 to 322. So right off the bat, I say, okay, that's an interesting area. Let's put a trend line in there. Now, I zoom out on the chart and I say, okay, wow, look at this. I mean, incredible. Let's go to the weekly, in fact. Look at this. So number one, this stock had an amazing appreciation, right? I mean, from 2008 lows right down here, it rallied from essentially $15 all the way up to $630 approximately. Now, again, it's fallen sharply, but in the scheme of things, the question is it really down enough? And what do here? I like to take my low from 08, so that's your financial crisis low, and I put a trend line in and look at this. The 50% fib aligns with our gap fill at around 323. So now I have a thesis that would hold up in front of a board of top traders that says potentially a low maybe around 323. Now, it's still got to fall about $18 from here, but that's not that much for this company. Let's be fair. The other thing to keep in mind is that if it were to continue lower, and I'm going to get rid of the fib just to be clear, there's a major pivot. See this up move here and then this down move here? So there's a pivot point right there at around 288 that would be a secondary level. And remember how I trade, folks. I don't say, oh, well, 323 has two factors, so I'm going to go all in. Like, that never ends well. Well, maybe on occasion it does. But most of the time, you're setting yourself up that if you're wrong, you're going to get slammed because you went too heavy. So my game plan on something like UNH as a swing trade would be to start a swing trade at 323 and then probably add at that 287 level. And essentially what I'd probably do is I'd probably start with like a 1/3 or a 1/4 position at 323, add another 1/3 or 1/4 at the 287 marker. And then I leave myself either a half or a third to add if it surprises me again and goes lower, down to, let's say, 240 or 250, right? And so essentially as a swing trade, I don't need to hit the exact low. I just have to be able to leg in for that bigger retrace when it does ultimately occur. Okay. So that's UNH today. Flipping over to SE, this stock was up sharply on earnings. It's still up quite a bit. This is kind of like it's a gaming and online a marketplace kind of thing, like an Amazon / some other gaming stocks with Amazon mixed in there out of Asia. But the point being is the stock is up sharply today. If we flip over to the daily chart, the stock has been rallying quite a bit. But isn't this amazing? Look at where this thing traded back in 2021. I remember this vividly because I was short this stock in 2021. but I was short like a little earlier here. And I remember just being like, what the heck? Why is this stock continuing to go up? Like it was literally trading at 100 or 150 times revenue. And I was like, come on, this is ridiculous. And then obviously, we all know things can go higher than you think. And this was a great example of it going higher than I thought. I did hold on. And when it crashed, we did just fine. But you can see the drop that occurred when reality set back in. Now the stock is climbing back up. What level would be interesting? I would say starting around 167 here. Also, let's do our fibs, right? We have very clear high pivots to low pivots. And if we do our fib, let's see where we get. Yeah, look at this. So right up here, around 206, give or take, there'll be a little bit of a pivot point there. And then that's higher up. But look, 166 is right in that vicinity that we were just talking about. So for day, now listen, I don't think I would swing trade short this, to be honest. It's got a lot of shorts in it. It could squeeze, but would I potentially day trade it today if it got up to 166, 167? Yeah, probably I would think about a day trade short for a quick in and out. All right, for flipping over to Bitcoin rallying a little bit today. So again, if we flip over and see, you can see Bitcoin after yesterday's pullback is pushing up today. Bitcoin now remains basically between this double top at 109, 109,000, and this now support. Remember, this was resistance, breakout, and confirmation. So if it comes back in, this should act as a short-term support level. If it goes up here, I'll add to my short, which I'm basically flattish on, slightly out of the money on. And then I would add up here, which is our bigger upsloping trend line that goes back a long, long way, which is right around 113, 112 area. But right now, again, Bitcoin, it's had a great move. It looks like it's starting to consolidate, kind of doing what it did over here. It's now starting to do that. So you can see big move, consolidation, big move, and it's consolidating again. That's very normal. The way I look at consolidation, folks, after a big move, think about a marathon runner, right? I always like to put things in terms that I understand. Hopefully it helps you guys understand as well. If you run a marathon, and I don't run marathons, let's be fair. I don't run marathons, but I have friends that do. If I said to them, hey, you just ran a marathon, now go run another one without any break, they'd be like, dude, you're crazy. And they might even be hazardous to their health. What do they need to do? They need to rest. They need to eat. They need to recover. They need to take it easy. They essentially need to consolidate and rejuvenate before they can make that next move. And that's what bullish consolidation is. Same thing on the bearish side, right? A big move down, and then you consolidate, you kind of take a break, and then you can make your next move to the downside. So that's essentially what consolidation is on a simplistic basis. Gold today, flattish on the day. I did again exit my gold trades. I even exited my GDX short yesterday. Not to say gold can't go down here. I'm still expecting it to, but we were in the money pretty significantly. So I just said, you know what? Let's book the profit. No one goes broke taking a profit. One of my favorite sayings. And again, that was the right, at least as of now, I think that was the right move to just bank the profit and then just look for other opportunities. Support again, I might be interested in looking at a long opportunity on GDX if gold comes in here. So I'll keep you guys posted on that. That's in the Smart Money Commodity Service and miners. We do ETFs and miners and drillers and all that stuff. And essentially, I give out my exact entries and exits versus here. I just kind of tell you, hey, guys, I did get in this or that, minus my exact entries. Okay, silver today. Let's take a look. Silver's chart has been slightly bullish. Looks like overnight it popped and tried to break out here above this trend line and then got pushed back down. The chart is still bullish. But again, it's just kind of stalled out here. So nothing new to report on this chart here. And then if we take a look at crude oil today, crude continues to grind up. It hasn't taken out yesterday's high yet. But again, notice where yesterday's high was. It kind of nibbled on the high area right here, right? So all these highs and then came here. Now, again, for me, there's no trade here. But if we got into this area, I probably would take the trade between $65 and $66 a barrel. I probably would short oil at that point. Looking at natural gas real quick, nat gas is just kind of stalled out. Now, the more this consolidates and makes a bullish pattern, essentially it ran its marathon and is now going sideways. If it were to really consolidate enough and then pop into this level, I'm no longer interested in shorting that because it's building too much energy where it could then push above. So just be aware that a level, and this is a really important factor, folks, levels have a time factor to them. Meaning that even a gap fill, like a gap fill is great, or a Fibonacci retrace. If you get close to the level and then make a bull flag just below it, I'm not going to short it when it hits it because it's too much energy and it can blow through and it took too long. So again, this is one of the kind of elusive things that most technical traders don't understand. They're like, oh, it's a gap fill and a fib level, so I'm always, no matter what, going to take that trade. That's not true. And again, that's something that I teach, obviously, in the Winning Trader series, but it's something that I go over in these as well. So just be aware, a level has basically like a stop clock on it, a stopwatch. And it's like, okay, if it gets to this level within this amount of days or this amount of candles, it is a trade. If it takes too long, cross it out. It is no longer a level, and that will improve your win rate. Absolutely. All right, guys, I got to get to my trading room. As always, you guys are rock stars for sitting with me here every morning. I really do appreciate it. I appreciate the support and the dedication that you guys have, and I really hope that these are helping you guys out, and I see from the comments they are, and I appreciate each and every one. I don't always get to like and love every comment, guys, but I do look at them and scan through them, so I do appreciate each and every one of you. Have a great one, folks. I'll see you soon. Take care.